Hey, welcome to the Q1 2024 market update. Today we're going to be talking about Greater Boston commercial real estate sales trends. In particular, we'll be focusing on the Rockingham, Essex, and Middlesex County markets, pulling data from the $1 million to $100 million market segments for retail, office, industrial, and flex. We go back to 2006, and we've been pulling data here by year across these asset classes for these price ranges so that we can give you an overview of how the market's actually doing. We want to make sure that you're getting the real data behind the market, not just anecdotes about what people might be feeling or thinking about things happening. So if we go back and we look at the long-term average going back to 2006, you will see here that the typical market velocity, this is the average number of buildings sold in a year, is only 454 buildings per year. That's for all three counties. We're talking about over 20,000 properties. We have an average of 454 transactions per year happening. How did this work out for last year? Well, last year, the year ended at 492 trades. Okay, so we were just a tip, a little bit over that long-term average. Year to date for 2024, we are trailing. We're at about 106 transactions. If we annualize that out, we're only going to end the year at about 342 transactions. So it is possible that 2024, we're going to see a continued slowdown in the market just by building trades. Interestingly, looking at the year-over-year effective change in velocity, if we chart just the first quarter, we are seeing a slowdown here. We've got a 78% slowdown over last year. But again, I'm comparing one quarter to the entire year, so this isn't a fully reliable number. But if we look back, there is a correlation to the 2007-2008 drop-off in volume, which is a year-over-year change. I expect over 2024, this negative 78 will start to come up. Okay, as we see more volume in the market through the rest of the year, that number will come up. But it is confirming that we are seeing some slowing in the market. And this is really coming from, I'd say, two primary areas. One is seller versus buyer expectations on pricing, and the other is lending being constrained, non-existent, or the cost of lending and how that's affecting seller and buyer perceptions of market value. The 10-year Treasury, which we like to track because it gives us a baseline for what capital could actually do in the market if it decided not to go into commercial real estate investments. If you could go buy a 10-year Treasury and achieve let's say a dividend rate that's attractive for the risk that you're taking, you may want to go there and invest your money. So what we saw in 2023 was the market for the 10-year in the fourth quarter started to attenuate. We had the 10-year go down to about 3.5%, 3.6%. It has rebounded in the first quarter of 2024. We're back up around 4.5% to 4.7%. So because of that, it's putting upward pressure on commercial lending pricing. It's also putting downward pressure on commercial real estate valuation pricing. So that 10-year Treasury number is telling us that sort of risk-free rate that you could go and earn 4.5% on your money in the 10-year Treasury versus investing your money for a 7 or 8% in a commercial real estate investment is still attracting some capital. And that's one of the reasons why you're seeing that deceleration that deceleration in volume occurring. So side by side, 2006 to 2024, the long-term average is at 454 transactions. Year to date, we're at 106. The average volume in properties sold, $2.8 billion. Year to date, we're at 231. So not a great start to the year in terms of first quarter velocity. And how does that translate into pricing? So if we look at the overview of the average price per square foot for retail, flex, industrial, and office, you'll see here that the flex market is still finding its stabilization point. The industrial market has actually seen an upward inflection in average price per square foot. The reason for that is in the first quarter, we saw a pickup in higher quality industrial sales occurring. Last year in 2023, the average price per square foot had come down on industrial, and that was attributable primarily to deals that were selling at lower prices per square foot in less functional industrial properties like mills, for example, mill buildings that trade high square footage numbers, low price per square foot prices because they often have functional obsolescence with multiple floors, etc. The office market, big drop off in average price per square foot. We are seeing here an extreme slowdown in trades. It's almost become a self-fulfilling prophecy where you have investors pulling back from office, you have lenders pulling back from office, and so the 12 deals that traded in the first quarter is all we have for pricing. And the average price per square foot there came in around $92 a square foot, which is why we see this big drop off in the office pricing. And then retail is holding on. It was one of the favored asset classes in 2023. So we'll see more of that in just a second. Nationally, the overall picture from Green Street in their commercial property price index shows us that the market is showing signs of stabilization. Green Street pulls data from almost every asset class and then puts it into a composite index to give an overview of their perspective of how the market's actually performing. What you will see here is that Green Street's telling us that from the market peak, that is May of 2022, when the rates really started to go up and pricing had topped off in the market, nationally we've seen a 22% drop in value. And this is really driven primarily by the interest rate market and the cost of capital resetting asset inflation to the new pricing in the debt markets. So as a result of that, the market for the entire United States, for all asset classes sort of jammed together into a composite, is showing a 22% value correction. Does this mean that each individual asset class is corrected 22%? No, it does not. Office may have corrected more significantly, while industrial less so. So don't take this and apply it to individual asset classes because it's not going to necessarily equate, but it will give you an overview of how the Fed's mission to stem inflation has caused collateral damage in the commercial property pricing across the United States. This is exactly what they've wanted to do, which is essentially to destroy money. And they've done that here in the commercial real estate market across the U.S. From a sentiment perspective, overall sentiment is generally improving in the overall market. We will see here that we're starting to show some signs of sort of recovery of sentiment. People starting to feel better about the overall market for the commercial real estate market. So retail, let's take a look. Retail volume, 2023, third busiest year going back to 2006. So if you were selling retail property last year, it was a great year to be selling retail. Investor appetite's very high. Retail has been favored in the market and will continue to be so through 2024. Annualizing out, we've had 53 retail properties sell year to date. If we push that out, we've got maybe 171 deals this year. So, slower, maybe slower year for retail compared to last year, but still looking like a very strong year. And then our average price per square foot still holding, right now we're hovering around $287 per square foot for retail. Looking at Dr. Mueller's market cycle forecast out to the fourth quarter of 2024, he is expecting the Boston area, the Boston MSA, to continue to hold its point at the peak of the market cycle. So strong investor demand for retail, strong lender demand, strong tenant demand, all strong positions here for retail. The industrial market. Last year, we saw a volume correction in the market. We also saw a pullback on trades of higher quality industrial. We saw more tertiary and secondary industrial markets trading with higher square footage buildings that have some obsolescence at lower prices per square foot. So what looked like a price correction for retail was really, for industrial was really more of a volume correction last year. And we're actually now, from a volume perspective, we're at 21 deals year to date, and we've got an annualized projection at about 68. So we're seeing some signs of slowing here. I'm curious to see how the next quarter shows for industrial, because we are starting to see some higher quality buildings in the sales set. In fact, that pushed our average price per square foot for industrial back up to $201 per foot, as we're seeing those buildings start to come into the market and transact. And then our projection with Mueller's market cycle monitor out to the fourth quarter of 2024 has Boston still at a very strong position for industrial through the end of the year. Then there's the office market. The office market has, in fact, come to a point where we are now in a very slow first quarter. We have 12 deals that traded in the first quarter, and annualizing those out to 39 transactions this year. This is a sort of combination of lender pullback for office product and buyer perspectives on office being very negative. And so with this low volume of transaction activity, which is annualizing out to a 2008-2009 level, we are seeing average price per square foot for these deals so far this year, and there are only 12 sales, at $92 a foot. So not looking like a great year for office. And if you are in fact an owner of office, you may want to hold the office product until the atmosphere shifts a little bit. Or if you're a buyer, you want to probably get into the market. It is one of the markets that people typically wait every 10 years to see. And you need to understand clearly how to operate an office investment property or reposition an office investment property. But if you are, in fact, one of those people that often says, I like to buy at the bottom of the market and sell at the top, and you're complaining about why the market is not where you want it to be, well, our forecast for this year is that office is in that point where it's a great time to buy office buildings if you are, in fact, a value or opportunistic. So that's our market update for the first quarter of 24. If you, in fact, have an asset that you're considering selling this year, or you'd like to get an update on your valuation, we can set up a discovery call with either myself or one of my teammates, and we'll ask you some questions about what you're trying to accomplish with your property and how we might be able to help you achieve a financially meaningful outcome for your portfolio. And then if you decide you want to go forward with us to take your property into the market, to position it correctly and strategically to draw the right buyer who will pay the right price for your property, you can elect to engage us to go forward with that, and we can give you the exposure that you deserve. And at that point, once we find that right buyer that's willing and able to execute on a trade, we complete the transaction, and then you can celebrate with your closed deal. So again, Jeremy Searier here with MANSARD. Thanks for watching. I look forward to seeing you in the next market update. And if you, in fact, want to connect with us, you can do that via our website at mansardcre.com. On the top right corner of the site, you will see a button that says Request a Consultation. And you can click that and submit a form, a contact form to us. We will call you back. Or if you'd like to call our office directly, it's 617-674-2043. You'll be connected with one of our teammates immediately. Thank you, and I'll see you in the next video. Take care.